Welcome to the Transparent FX Academy. In this video, I will show you exactly which is the best way to approach the market from a swing trading point of view. So we will be taking a pair, dissecting it both from a technical and order flow perspective to understand which is the best and highest probability area to be looking for a profitable swing trading opportunity. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so what I will be doing today is performing a full breakdown on CADJPY, which is a very interesting pair to follow at the moment for a large number of reasons. Most importantly, because since it's a little bit a complicated situation, it's very interesting to analyze it from an educational standpoint, because I can speak about many key concepts that you can apply in your own trading. So let's start the full breakdown and make sure you stick to the end of the video, because I will show you how we can be looking for a potential trading opportunity. Now on CADJPY, what is the situation? First of all, from a weekly perspective, we have a market that has created this W formation. Now, after the market has created a W formation that is completing exactly at the previous weekly support, now turned resistance, what do you expect? You expect the market to make a move to the downside, back to the neckline, aka the completion zone of the W formation. Specifically, if you have a market that is creating a W formation and the completion zone, as I said, is exactly the previous support and resistance, this is a very high probability scenario in which you will see the market actually make the move to the downside. So it's the best, one of the best scenarios that you can have when it comes to W and M formations, having the completion zone at a structure level. In fact, here, before starting this impulse to the downside, this is the last time that the market went to the upside, therefore it's exactly the previous support to resistance, so the structure level. So this is what we know. We have a situation in which the market has just completed the W formation and is now retesting the neckline. So the previous resistance now turned support from a weekly perspective, and we can expect a shift away from the area. That is what we have on the weekly. Let's go on the monthly, because there is a very important thing that I want to show you that we currently have on the monthly time frame for this pair. Now, as you can see, the last monthly candle here is a candle with a very long wick and a small body. Now, there are currently 5 days and 12 hours before this monthly candle will close. But if this monthly candle will close more or less with this shape, so a green body, possibly a little bit higher, a little bit bigger green body and a long wick, you can expect the next monthly candle to try and fill in this wick. So basically to have a start of the month which is bullish. That is what you expect most of the times when you see a candle like this. I spoke about this also already here on YouTube in a video. Now, what we can also notice on the other side, however, is that the market is currently, why it has created this wick, because is currently rejecting all this previous support here, which is now term resistance at this area, plus it has completed this impulse correction pattern, and you can expect the continuation to the downside. So even if the candle closes like this, you just expect the market to fill in the wick and then rejected zone again to the downside for the continuation lower, given that the monthly time frame has bearish structure. So recapping what we have up to now from a weekly and monthly perspective, we want to see the market start a move to the upside and then reject to the downside, right? Because on the weekly we want to see this zone get rejected to the upside, but on the monthly we want to see the wick getting filled, but then we want to see the continuation to the downside to reject the monthly structure. Perfect. Now, before we go down on the daily time frame, let's go and see what we have from a COT perspective, so commitment of traders. what big banks and institutions are currently doing from a CAD perspective and what they're doing from a JPY perspective. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, if we check the CAD, what we can see that in the long term, we went from having 38K net positions all the way down to having minus 25K net positions, meaning that we went from having way more longs than shorts from an institutional perspective on the CAD. So with 74K longs and 36K shorts, to having way more shorts than longs with 45K shorts and 19K longs, in fact having a negative net positioning with minus 25K and a 36% short exposure. So overall, CAD in the long term got a lot weaker. However, we must notice that in the short term we see a little bit an increase in the net positions, however is not backed up by proper longing. As you can see with the last report, they actually closed some longs, so it's not really strong at all. Let's go and see what we have from a JPY perspective. Now on the JPY, we can see that we had a huge shift from a massively negative net positioning to a very positive net positioning, all the way up to having 61K longs with only 29K shorts, which is definitely something that you expect in a period of uncertainty like the one that we are living and have lived. So you expect money to be flowing at the JPY as a safe haven. But lately we have seen a decrease as well, with a lot of longs getting closed, 13K here and 5K here. However, proper shorts haven't been added as well. It's very important to say this. Now let's go down on the daily time frame and see what we have. Now, going down on the daily time frame, there is one immediate thing that we can notice. Why do you think that the market stopped exactly here? The market stopped exactly here because at this level we have this red candle. Now, if in a huge impulse to the upside, there is one candle which is not related to the move to the upside, so this red candle here, it means that the market has reacted to this zone. So this is a level of previous resistance, which is now turned support. And if a level of previous resistance is now turned support, this is a strong demand area for CADJPY, meaning that at the moment the market is currently at a very strong demand area. With this in mind, what we can also notice is that after this impulse, the market has basically created this consolidation here. And after a consolidation, this could easily be an accumulation before the continuation to the upside, given the fact that is happening exactly at a support area. So we have a lot of indications that from here we can definitely expect a move to the upside. However, there is one thing that we must notice. At the moment, this resistance here is still holding, meaning that the market still didn't create any bullish structure. So this is how we will be approaching this kind of situation with students. Now, if we go down on the 4-hour time frame, what is the first thing that we can see? We can see immediately that here the market has made this move to the downside, and from there we still didn't see any sign of bullish price action, so everything is still bearish from a 4-hour perspective. So obviously, can we be looking for a long? Obviously not, because if everything will remain as it is right now, the market will easily break the daily support to the downside, and at that point we will have to adjust to the new market structure, and I will keep you guys updated here or on TradingView. But if we will see the market clearly from a 4-hour perspective and daily perspective break back to the upside and shift to a bullish market, at that point, what we will be doing with students, we will be monitoring price action on the 4-hour time frame inside of this zone, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long position for the shift to the upside that we wanted to see from the weekly time frame, filling in the wick that we wanted to see from the monthly time frame, and creating the move to the upside to grab the liquidity before the drop that we want to see from a monthly perspective actually happens. But keep in mind that if everything remains as it is right now, the area on the daily will just break to the downside and the market will easily continue lower because everything at the moment is still bearish. Okay, everything is still pushing to the downside. There is no confirmation for the long yet, but things might change in the future. So that is why we will be paying a close attention to this pair, waiting on the 4 hours for the shift. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you the market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. Link is in the description, or I will see you in the next video.